Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is November 30th, 2023. It's the last day of the trading month and lots going on in the market, so let's get started. In this Kickstart video, I'd like to take a look at some of the major currency pairs. So we'll start off with the euro versus US dollar. And first, before I get into that, let's talk a little bit about the data. We had the PCE data come out pretty much as expected across the board. The big surprise was the initial jobless claims and continuing claims. In particular, they soared to the highest level since November 2021, suggesting that those people that are getting laid off in just the normal course of the economic cycle are not finding the jobs as easily as they once were. And so the continuing claims continue to move higher. If I can use continue in two times in the sentence. And that is an indication of a softening in the jobs market. It's not as tight as it used to be. It's still fairly robust, but still getting weaker, and which is good news for inflation down the road. But the market is always worried about, well, do we go too far? So the other thing is OPEC. OPEC is now saying that they're going to have more than the expected cuts from their members, which is a big surprise, and so that is having an impact as well. Rates are off their high levels, but still a little bit higher, and we're seeing stocks come off their high levels as well as we head toward the opening here, and the dollar is moving higher. Looking at the euro versus US dollar, the initial reaction off of the data was a move to the upside that took the price back above the 200-hour moving average. That's a green line in this chart. The price had moved below the 200-hour moving average for the first time going back to this day right here. I guess it's November 13th, where we had a couple bars where it went below it here. The day before that, we went below it as well. But it really is going back to beginning of November, November 2nd, November 1st, when the price spent more time below the 200-hour moving average. So for the month, the price has been trending to the upside in the euro versus US dollar. And we are getting corrective moves as we head into the closing day of the month. Technically now, if the price can remain below the 200-hour moving average, that's our risk level for traders. If we are going to correct lower, we'd want to see the price move down toward the 38.2% retracement, and maybe this swing area through here. Well, not maybe, but yes, the swing area through here, where we had a number of different swing lows and swing highs going back in time. You can see the number of different times that the price found either resistance or support against that level before moving to the upside. So this area becomes the next key target on the downside. Then we'll start to look toward this 50% is actually a longer term move down from July 2023 high to the low price, and then we get to the 50% of this move. This is a last trend move, by the way, to the upside that I'm using as a retracement target, something easy to get to on the downside to prove that the sellers are taking more control. So first things first, get below the 38.2% retracement. The risk is stay below the 109.37 level, which is a 200-hour moving average. If you can do that, the sellers are in play, probably in control in the short / intermediate term for the euro versus US dollar. Let's take a look at the dollar versus yen. We are seeing a rotation to the upside, currently trading at 148.14, which is right at the 100-hour moving average. That's a blue line in this chart. You can see that earlier this week, the price traded above and below it on Monday, but then moved below it and used that 100-hour moving average as resistance right here before moving to the downside. And in the process, we broke below the 100-day moving average. That's this blue line right here. And we traded above and below it in trading yesterday. And again, today, as you can see, the sellers have their opportunities to get below the 100-day moving average, but they could not sustain that momentum. We started to see a rotation to the upside. The initial reaction off of the data this morning was a move back down toward the 100-day moving average, but early buyers against that level and against this low price right here seem to have they were waiting for this opportunity right here to buy the market, and indeed over the last hour or so, we've seen a rotation back to the upside. Now, going forward, I'm going to watch this level right here at 147.96 up to 148.03, right around the 148 level to hold support. If the price can hold support against that level, that's a risk-defining level in the short term today for traders. If it can hold that level, then I would we would next look for the 200-hour moving average. The price is not traded materially above the 200-hour moving average on Monday. It did actually move above that level, but quickly failed and use that level to lean against on the way to the downside. So you have to go all the way back to this day right here when the price traded more above that 200-hour moving average. That level comes in at 148.45. Get above the swing area up here up to 148.59, and we'll look toward the 38.2% retracement of this trend move to the downside. As traders know, I like to see the price get above the 38.2 to prove that the buyers are more in control. So all these levels become targets on the top side. It's what happens when the market has a trendish type move and leaves a lot of support or resistance levels to get back to and through, including 100-hour moving average, 200-hour moving average, 38.2% retracement. All those levels need to be broken to increase a bullish bias. So watch 148 down here, down to 147.96. As long as that can hold, then look for a break of the 200-hour moving average of 38.2% retracement to propel this pair more to the upside. Finally, let's take a look at the sterling versus US dollar, and it fell in sympathy with the euro versus US dollar this morning. By the way, softer euro CPI data helped to push that currency pair to the downside. We're seeing that, saw that follow through in the sterling versus US dollar. The numbers came out, and the price spiked back above the 100-hour moving average, but could not sustain the momentum, and the price then started its rotation back to the downside in the sterling versus US dollar, taking the price near the low prices through here. Now on the downside, unlike the euro versus US dollar, which fell below its 200-hour moving average, the pound versus US dollar has not broken below its broken below its 200-hour moving average. It sits down here near the 38.2% retracement of the last move to the upside, right through here. I don't know. I guess this is the well, anyway, I have two Fibonacci's here, but what the point is here, if the price is going to move lower, we need to get below this area right through here. This area is home to a 38.2. It's home to a 200-hour moving average. It's home to this low right here before the market moved higher. So all this trading near the 125.80 level, 90 level is where the price needs to get to and through on the downside for the pound versus US dollar if it's going lower. In the short/intermediate term, if the price can remain below the 100-hour moving average, the sellers remain more in control. So there you have it. A look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.